If you're watching the metals market right now, stop scrolling for a second. Because what just happened in silver is not normal. I'm talking about a metal that lost over a quarter of its value in basically a blink, and then turned around and exploded higher with one of the largest daily gains ever recorded, nearly 10% in a single session. That kind of move doesn't whisper, it screams. And stay with me here because I'm going to show you why this rebound matters far more than the headline number. And more importantly, how you can recognize this exact setup the next time it starts forming before the crowd catches on. Now, before I explain what caused this violent reversal, let me teach you something most people never fully grasp about markets. Price doesn't just move because of opinions, it moves because of pressure. Financial markets are less like voting machines and more like hydraulic systems. Pressure builds quietly, invisibly, and then suddenly a valve releases. Think of it like stretching a rubber band. The further it stretches, the more energy gets stored. But here's the key. You don't know exactly when it snaps back, only that the tension makes the snap inevitable. Most investors focus on stories. Smart investors watch positioning. Here's what you need to know about extreme oversold conditions. When everyone who can sell has already sold, the market runs out of fuel on the downside. Not because sentiment improves, because mechanically, there's nobody left to hit the sell button. The selling pressure exhausts itself. And when that happens, even small buying interest can create outsized moves because there's no resistance left. That's what we just witnessed. If this is making sense so far, drop a comment and let me know you're following along, because we're about to go deeper. Now here's what's actually happening beneath the surface, and this is where it gets really interesting. Last week's collapse wasn't just panic, it was forced liquidation. Futures exchanges raised margin requirements, which basically means traders suddenly needed more cash to hold the same positions. And when traders don't have that cash, positions get closed automatically. It doesn't matter if they want to hold. It doesn't matter if they believe in the trade. The exchange forces them out. So, the sequence looked like this. Prices dropped, margin calls triggered, positions unwound, which push prices lower, triggering more margin calls. That's the cascade. That's the waterfall effect you saw playing out in real time. But here's what's wild about this. Liquidations create artificial price levels. They don't reflect what buyers are willing to pay under normal conditions. They reflect desperation. They reflect mechanical selling, not fundamental selling. Someone getting margin called at 3 in the morning isn't making a rational decision about silver's long-term value. They're just trying to survive the next hour. Then Tuesday arrived. Dip buyers stepped in aggressively, not because they suddenly loved silver, but because the forced selling pressure had largely burned itself out. When that mechanical weight lifted, price didn't just drift higher, it launched. We're talking about one of the sharpest single-day reversals in modern market history. And I want you to understand something critical here. This wasn't about new bullish information hitting the market. This was about the removal of artificial selling pressure. Big difference. Now let me show you what most people are missing in all of this noise. This surge doesn't automatically mean the bull market is back. Reflex rallies after liquidation events are common, really common. Think of them as the market gasping for air after being held underwater. The question you should be asking isn't, is silver strong again? It's, was the selling structural or emotional? Because if it was structural, if there's something fundamentally broken in the demand picture or the macroeconomic setup, then volatility probably isn't done with you yet. But here's the part that should make you pay attention. The volume behind Tuesday's move was enormous. We're not talking about a thin rally on low conviction. Real money stepped in. Now, that could be short covering, traders who sold silver getting forced to buy it back at higher prices, adding fuel to the move. Or it could be genuine buyers seeing value after a 25% haircut. Probably a mix of both. But either way, the message is the same. The selling exhausted itself, and when it did, the snapback was violent. Here's what I'm watching closely now. Is this bounce getting follow-through, or is it already fading? Because the first rally after a crash can be the most seductive and the least reliable. Markets love to fake you out. They love to make you think the worst is over, right before another leg down hits. I've seen it happen dozens of times, and I want you armed with the pattern recognition to spot it yourself. This is the exact same playbook markets have run through for decades. Let me show you. Go back to 1980. The Hunt brothers tried to corner the silver market. Prices spiked to $50 an ounce, then crashed spectacularly when margin requirements got hiked and leverage positions collapsed. What happened next? Sharp counter-trend rallies that fooled investors into thinking stability had returned. Then more volatility. Then eventually a real bottom formed, but only after the leverage was completely wrung out of the system. Or look at 2008, the commodity unwind during the liquidity crisis. Metals plunged as hedge funds and institutional players dumped everything to raise cash. Silver got cut in half. Then it staged a breathtaking rebound once the deleveraging slowed, and people realized the Fed was about to flood the system with liquidity. Same pattern, forced selling, violent bounce. Then a retest of the lows before the real move began. Even the 2020 pandemic shock showed this rhythm. March of 2020, silver dropped from $18 to $12 in a matter of days. Liquidation first, then clarity, then a massive bull run that eventually took silver to $30. But that first bounce, it failed. Twice. Before the real breakout happened, every time positioning gets extreme, price stops behaving politely. It lurches, it overshoots, it reverses hard, it tests conviction. And if you don't understand that rhythm, you're going to get shaken out right before the real move starts, or you're going to chase a bounce that evaporates. Now, let me be skeptical for a moment because I want you to hear independent thinking, not just hype. Could this rebound already be signaling a durable bottom? Sure. It's possible the worst is behind us. It's possible that margin requirements stabilize, forced sellers are done, and we're off to the races. But let me be honest with you. The first bounce after a crash is often the most seductive and the least reliable. Traders love to call bottoms because it feels decisive. It feels smart. Markets rarely reward that kind of certainty this early. And here's the thing about manipulation narratives you might hear floating around. Whether they're true or not doesn't change how you should operate. Maybe big banks are suppressing prices, maybe algorithms are rigged, maybe there's a conspiracy. I'm not here to debate motives. I'm here to help you read what's actually happening. Focus on what you can actually observe. Margin changes, volume spikes, volatility expansion, positioning resets. Those are measurable. Those are actionable. Those will keep you on the right side of the trade, whether there's manipulation or not. There are probably 3 types of people watching this right now, and I want to speak to each of you directly. First, you might be the investor who rode the drop and feels shell-shocked. Maybe you're holding physical silver or mining stocks, and you just watched a quarter of your value evaporate in days. If that's you, take a breath. Your biggest edge right now is patience, not reaction speed. Ask yourself, has the underlying thesis changed, or did leverage simply flush the system? If you bought silver because you believe in long-term monetary debasement, inflation concerns, or industrial demand growth, did any of that change last week? Probably not. What changed was positioning. What changed was sentiment. Those are temporary. Fundamentals take longer to shift. So don't let a technical washout shake you out of a thesis you spent months building. But also, don't be stubborn. Re-examine your assumptions. Make sure you're still right. Second, you might be the opportunist staring at this rebound thinking, did I just miss it? Should I chase this move? Maybe, maybe not. Here's how I see it. Markets usually retest chaos zones before choosing a direction. That 10% bounce, it might hold, or it might give back half before finding real support. You don't have to chase the first green candle to participate in the bigger move. Wait for confirmation. Wait to see if buyers defend the next pullback. If they do, that's your signal. If they don't, you just saved yourself from catching a falling knife. Third, you might be completely on the sidelines, trying to decode whether this is danger or opportunity. Good. Curiosity beats impulse every time. Your job right now is to watch and learn. Start watching how price behaves after extreme days like Tuesday. Does follow-through appear over the next week? Does volume confirm the move, or does it dry up? Do other metals like gold and platinum show similar strength? Or is silver moving alone? That pattern recognition will serve you for decades across every market you ever trade. Here's the universal principle tying all of you together. Extreme moves are information, not instructions. Information. They tell you something about positioning, about leverage, about where the weak hands were hiding. But they don't tell you what to do next. That part requires context, patience, and discipline. So, here's what I want you to answer in the comments. Which type are you? Are you holding and reassessing? Are you looking for an entry? Or are you watching and learning? Tell me where you're at, because I read every single comment and it helps me understand what you need. Now, here's where I stand personally, and I'm going to be completely transparent with you. I'm not treating this as a clean recovery, but I'm also not dismissing it as noise. I'm neutral, leaning watchful. Let me tell you what I'm personally watching over the next few sessions. First, I'm watching whether volatility compresses or keeps expanding. If we see silver swinging 5 or 6% daily for the next week, that tells me positioning stress is still unresolved. Persistent turbulence usually signals that the market hasn't found equilibrium yet. Second, I'm watching futures margin policy closely. If exchanges leave requirements where they are, or even lower them slightly, the mechanical pressure fades. If they hike again, we could see another wave of forced selling. Third, I'm watching dip buying behavior. When silver pulls back, and it will pull back at some point, do buyers defend those pullbacks aggressively, or do they disappear? That'll tell me whether this bounce has real conviction behind it, or if it's just short covering and opportunistic scalping. Based on my analysis, this event was mechanical, not random, a pressure release, not necessarily a sentiment shift. The broader fundamentals, they're largely unchanged for now. Central banks are still holding massive amounts of debt. Inflation expectations are still elevated in many regions. Industrial demand for silver and solar panels and electronics is still growing. None of that changed last week. What changed was leverage got flushed out violently, and now we're watching to see if real buyers show up, or if we need to reset lower first. And if history rhymes, and it usually does, the next phase won't reward the fastest traders. It'll reward the most observant ones. The traders who can separate mechanical moves from fundamental moves. The ones who can stay patient when everyone else is panicking or chasing. I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've said here against your own analysis and your own risk tolerance. But if you made it this far, you're someone who thinks critically and wants to understand the why behind the move, not just react to the headline. That mentality will serve you well, whether we're talking about silver, stocks, crypto, or any other market. If this breakdown helped you see the bigger picture, do me a favor. Share this with someone who's trying to make sense of what just happened. Hit that subscribe button if you want more analysis like this when the next major move hits. And stay sharp out there. Think critically, verify what you see, and make your own decisions before the crowd decides for you.